beginning January the 1st, 2021, the new federal odometer law goes into effect, and it mandates that every state also follow the law and provide for new odometer statements, new reassignment forms, new secure power of attorneys and things like that. Many states have already done that. Some got sidelined a little bit with the COVID, and so you may see, depending on the states, I think all of the states represented that I saw in our chat box, certainly Georgia, Florida, South Carolina, Alabama, I'm sure are all up to speed. They're all pretty forward states. And the slide that I've got up just now kind of gives an idea of what we're talking about. Basically, the exemption is changing. No longer will a vehicle, when it turns 10 years old, be exempt. Now a vehicle will have to be 20 years old before you can exempt it. But that starts with the 2011 model vehicles, because the 2010s last year have already been exempted, or at least essentially could have been. So the new law really only applies to 2011 model vehicles and newer. So what you'll see on the little table there, of course, we already know that the 2000s, 2001s, 2010s are exempt at the 10-year age. Every vehicle has a birthday on January the 1st. So that's why the law goes into effect, January the 1st. So every vehicle has a birthday January the 1st, regardless of the in-service date. And we know how old a vehicle is by looking at the 10th digit of the VIN number. So the 10th digit of the VIN is coded to determine the year model of the vehicle. And we subtract the year model from the current year. And moving forward, if we get 20, we can use the word exempt. Prior, it was 10. So the 2011s, they're going to be exempt all the way through January the 1st, 2031. So you've got to be careful. We've seen some conflicting information from different states about how you handle an inadvertently exempted vehicle that is not allowed to be exempt anymore. For example, if you have a dealer that is unaware of this and he trades in a vehicle and it's a 2011 model vehicle, normally that cannot be exempt. And if the vehicle is given an exempt odometer disclosure in error, the problem is that some of the states are saying, well, you're just going to put the mileage now, because when you send it to the state, we've got to have the mileage. So you put the mileage on there. And the problem with that is they're saying that you just mark the odometer discrepancy box. I think we'll see some changes to that, because if you mark the odometer discrepancy box, that law was really required for you to go outside and check the door jamb and see the odometer discrepancy sticker and make a determination as to what the mileage actually is on the vehicle. So I'm not sure that that's going to be the correct answer moving forward. There may be some changes to that as the Department of Motor Vehicles are enlightened to the federal law and the requirements. But certainly in the short term, that appears to be one of the things they are telling us to do. I would probably suggest this, that the odometer statements that are inadvertently marked as exempt when they should not have been, you're going to have to disclose the mileage to your customer. And if you know that the mileage is going to be, accurate moving forward, or you don't know if it's going to be accurate moving forward, you follow the state's guideline for marking the odometer discrepancy if you believe there is one. If you don't think there's one, then you would run the risk. But I believe that if you have a separate disclosure to the customer that basically says something along the lines of, this vehicle has been marked exempt even though the law doesn't allow for it to be marked exempt, it may be that a separate disclosure that explains the circumstances may be appropriate. But certainly the marking a discrepancy when there's not one, I don't know that that's the correct answer, but that's certainly what some states are advocating right now. So be aware of that. The easy thing to do is just make sure any vehicles that are 2011s or later have the mileage properly disclosed as normal. So that's the odometer law change. I wanted to at least make mention of that to everyone. Some of you may be aware of that, some of you may not.
Right. Okay. Every year I'll send my clients a year-end checklist on what, I need to do your tax return or do your books. And a lot of times you should have been doing stuff through the year, and you should have been pulling your W-9 for your contractors. Okay. And can you pull a copy of the W-9 up on your computer on a PDF form?
I can.
Okay.
Let me grab.
There is a new form this year. It's going to be the 1099 NEC.
Now, did you put one? Did you put one into the?
I did not put the W-9 in there. I had it on PDF on my side, but I did put the 1099 NEC in the presentation.
Right. Okay. Well, I will get a W-9 from the IRS website.
Just want to kind of walk through this. We have a lot of problems with incomplete or inaccurate W-9s, and it's very important that you get it correct, because the Revenue Service is really starting to penalize my clients, some of my clients, for not properly filing correct 1099s.
All right, Bobby, I am going to share a different screen.
Okay.
Can we see that one?
I can see that one. Can you make it just a little bit larger, sir?
I can make that a little bit larger. I can indeed.
There we go. Good deal. So you notice the first one is the name that is on the tax return. Now, this gets kind of tricky to some clients, because you may have John Smith Repair Service that is not a corporation or a LLC, but he calls himself John's Repair Service. And he would put John's Repair Service on line 1. That would be incorrect. If his name is John Smith should go on line 1, and his DBA name would go on line 2. Now, keep in mind, if he is a sole proprietor, slide your W-9 up just a touch. You have 2 boxes where you have taxpayer's identification number. A lot of problems we have sometimes where someone will put John's Repair Service and then put the Social Security number and no employer identification number. Obviously, John Repair Service, well, Repair Service is not his last name. John Smith is his last name. So if he's not incorporated, then you should have, or if he's a sole proprietor, you should have a Social Security number. Now, if he is a LLC, come down to box 3. You have different types of LLC. You can have an individual, which is treated as a disregarded entity. He is a sole proprietor. He may or may not have a EIN number. That would be determined if he has any employees or contractors, then he would have an EIN number. If he is a partnership or a corporation, then you want to make sure you get the EIN number, because the Social Security number will not do you any good if you're sending 1099 to the company's name. Also, I would like to show on there you have a limited liability company on the next line down. That can either be a C corporation, a S corporation, or a partnership. If it is a partnership, you are still required to issue a 1099. So keep that in mind when you complete these W-9s. And still, one of the largest or the biggest problems we have with W-9s is we can't read them. When you get them, make sure you can read all the numbers. You'd be surprised. Some of the numbers, they look very similar in nature, and it's really hard for us to make it out. But that's just something you should have been doing the year. And if you call your contractor usually in January, they're kind of hard to get in touch with. You think so, Bob?
Yeah, I think they are. But I was just thinking, when you were saying that they can be hard to read, certainly that is true. I myself had a W-9, and I had the wrong number on it just because I couldn't read it. And when I submitted it to the 1099 to the IRS, it came back, and it could be a bit of a problem. So I was just thinking here, I'm filling this in online as we are talking, and it should be easy enough to read. So it seems like you could go to the irs.gov website and actually fill this in and print it out. That, of course, is handy if you're in your office or you've got, you're handing a check over. But if you're out in the field, you may take a blank one with you. So you may still have one that's hard to read if you're not careful.
Right, right. A lot of the ones we get are hand filled out. They're not typed.
Yeah.
So that's the problem.
So Bobby, the social security number down here or the employee identification number,
Correct.
whichever they've got. If it's a business, it should be an EIN. If it's an individual, it should be social security number.
Correct. And that goes back to line one. Line one kind of controls the type of number that you're going to get. Like John Smith, let's say it's John Smith at the individual, but it's John Repair Service Inc. Then you definitely, John Repair Service Inc. would go in line one, and line two would be blank. If it's
so if it's a corporation,
that would be the name that is on his tax return or the tax return that is performing the services for you.
So if it says, so if the name is John Repair Service Inc., then we're going to have the employee identification number down here.
Correct. And keep in mind, partnerships do get 1099s. Only corporations are exempt from 1099s.
Only corporations are exempt. Is that what you said?
That is correct.
So a partnership and an LLC could be treated either way. If an LLC is treated as an S corporation, then it's exempt. If it's treated as a partnership, then you need a 1099.
Correct.
Okay, well, that seems pretty clear. I don't know if there's any questions on that. I don't see any information or any questions about 1099s, Bobby, and W9s. I think that's a good job there.
Okay, we can go back to the slide presentation.
I will. Should be able to.
Okay, jump on down a couple of slides and we're just going to walk through this. We're about to wrap up 1099s here shortly. Obviously, you got to give them their $600 or more to done employees. Next one, Bob. Next. And normally they're due January 31st. This year, January 31st falls on a Sunday. So you're required to file by February the 1st, 2021.
Oh, extra day. Excellent.
Excellent. Okay, there are no extensions, okay, unless you can prove evidence of hardship. They are pretty strict on this rule because of the rapid filings. They are trying to match as many W-2s or 1099s to the 1040. So they're holding their feet to the fire on filing these on time. Next. Jump to, okay. And then going down to the bottom. And those are the penalties. Hit one more line there, sir. Those are the penalties. Okay. Now, keep in mind, this year for contract labor, it will not be on 1099 MISC. It's going to be on 1099 NEC. Next, Bob. Jump again to another slide and one more slide. And one more slide and we'll be there. And there we are. There's our 1099 NEC. That is the new form for 2021. Those is what we're going to put our wages on going forward. Okay.
What does NEC stand for, Bobby? Any
idea?
idea?
Non-employee compensation.
Non-employee compensation. Oh yeah.
Right. And you notice you have box 4, which is federal tax withheld. Don't know where we're going with that box yet. I mean, I have seen some federal tax withheld on garnishments on contractors that will actually send the person that is doing the paying or hiring the contractor, and they're having to withhold from contractors. But I don't know if one day they may try to have you withhold from contractors in the future. But we have a form for it now. So, and also, if you're paying an attorney for services performed, it will go on line 1 of non-employee compensation. Jump to the next slide, Bob. If you're paying an attorney for a settlement, where hopefully you never get sued, but if you do get sued and you have to pay on a settlement, it will go in box 10. Gross proceeds paid to an attorney. So you got to keep in mind, if you're paying an attorney, am I paying for services to be performed or am I paying for a settlement? That is something that is kind of new this year.
Interesting. So that's two different forms. One's a 1099 miscellaneous and one's a 1099
Right.
for non-employee
Right.
compensation.
You will still use the 1099 miscellaneous for rents. That is box 1 on this form. So if you
Right.
pay rents, you are required to issue 1099s for rents. Now, just a side note, if you have rental properties and you have people work on your rental houses, you are required to issue 1099s for those contractors that perform services to your rental houses. I have several clients that have a lot of rental houses. I will ask them for the information and they'll say, well, we don't have to issue 1099s. We're individual. Yes, you do. If you have rental property, you're required to issue 1099s. Also on Schedule E, there is a box to check. Are you required to file 1099s? Well, if you check no, or if you check yes, there's a second line. Did you file all of your 1099s? The penalties on these are starting to enforce. We want to try to make sure we file all the proper information returns. Okay. And let's go to the next box. Okay. If you do not have a related finance company, you take about a 5-minute snooze. This is a 1099-C. Are you familiar with this form, Bob?
I'm familiar with this form, yeah. And you said that if the dealer does not have a related finance company, we might talk about that in just a minute, if that's okay.
Yeah, sure.
But if they don't have a related finance company, does that mean that a car dealership that doesn't have a finance company can ignore the cancellation of debt 1099-C?
Car dealers are exempt from filing the 1099-Cs. The 1099-Cs are primary
good information.
lending institutions. So,
Okay.
and a related finance company will fall in that category. I have a lot of clients that have related finance company. A majority of them will file. Some of my clients say we're not filing it, and that's their decision. However, remember the penalties that we saw at the first slide. They also apply to the 1099-Cs. So if you're not filing 1099-Cs and you got about 15, 20, or 30 out there, do the math. It can add up. Okay.
Yep.
And let's go to the next slide and we're trying to outline why do you have to file. Keep on going one more time. Okay, it's required by related finance companies for any debt forgiven or written off $600 or more.
Hey, Bobby, let me stop you for just a minute, if you
Sure.
don't mind. What is a related finance company? And why would a dealer use one? Well, I mean, tell me a little bit about related finance companies. What do you see?
Okay. The car dealership itself is on the accrual basis of accounting, meaning that if you sell a car at the end of the year and you got a profit in the car, say of $3,000 or $4,000, you have to recognize the profit for income tax purposes, or the taxes on the profit for income tax purposes. If you sell that note, notes are generally sold at a discount, meaning that if you should receive $10,000 from the customer and you sell the note for $6,000, the car lot will have a $4,000 loss on sale of that note that it can charge off to expenses at the point of sale. The related finance company, the RFC that purchased that note, will recognize that $4,000 as income over the life of that note. So rather than paying the tax at point of sales, it allows you to pay the taxes as the customer is paying you if the customer pays all the way. So that's a big reason a lot of my dealers will have related finance companies.
That's fascinating. And of course, I think because they're two separate companies, both typically separate corporations, there's some insulation between the companies. If somebody slips on a patch of oil, for example, at the car lot and files a lawsuit against the car lot, maybe the finance company is somewhat insulated there. And so that there's also, it seems that there's some benefit in the collection world. Some people say that customers may be more likely to pay a finance company than a car dealership, and so maybe collections are a little bit easier. It insulates the repossessions that the finance company did. The car dealership, maybe can maintain a better reputation. it wasn't the car lot that repossessed the vehicle potentially. So there seems like there's a lot of great reasons to have a related finance company, as well as maybe some of the tax advantages that appear to go with that, Bobby.
I agree with that. That is a very true statement. So,
yeah. Well, fantastic. If anybody's got any questions about that, they can always, reach us later on.
True.
I'm going to go to the next one here for you.
If you agree to take less than the customer owes you, and that amount is greater than $600, you're required to issue a 1099-C. So
that's interesting. So if you settle an account or settling a debt,
no. Say the customer owes you, I want to say $4,000, and he comes to you and asks you, you take $3,000 cash right now and charge his deal off, and you agree to do that because you say $3,000 today is better than $4,000 over a period of time. Well, you have forgiven $1,000 in debt, which is greater than the $600. So now, again, you are required to issue a 1099-C if you forgive by agreement greater than $600.
Wow, that's fascinating stuff right there. So you think you're doing the customer a favor, and then the next thing is he's getting a 1099 from you. That's for the related finance company, not the car lot.
Not the car lot.
Yeah,
right. That's
interesting.
Okay, about repossession. If you repo the car, customer owes you say $10,000. You ACV the car, it's $5,000. Then you have a $5,000 bad debt to the customer. Then you will issue the 1099 to the customer for the $5,000. Now, keep in mind, I think go down one more slide. There's something I want to point out about the concept. Okay, there it is. A 1099-C does not necessarily equal the bad debt of the related finance company. And the reason for that is when the car lot sells the car and take a notes back for $10,000, the related finance company may purchase that note for $6,000. The customer still owes $10,000. So if he does not make any payments, the customer is going to get a 1099 for $10,000, the amount of the principal the customer owes. The related finance company will take a bad debt for $6,000 because that was its basis in the note. The car lot was able to deduct the $4,000 when it sold the note to the related finance company. So you really, the 1099s and your bad debts will not necessarily reconcile together.
Right, that's good information to have there, because I can imagine dealers scratching their heads wondering why the numbers don't match.
I had a dealer that asked me, why are my 1099 so much higher than my bad debt? I think you did something wrong. I said, no, you got to do the math. Luckily, your software would do that. Can we show that in the software, Bob?
Yeah, we probably can.
Yeah, I mean, that is a awesome tool when it comes to doing 1099-Cs. And it makes everyone's job a lot easier, especially your accountant.
Yeah, let me see if I can change the screens here real quick.
Okay.
And blast up this one right here. So we would go in the program. Do you see the do you see my?
I do. Go to 5 and then come over to reports for 1099s.
And we would run this for the entire year. Is that correct?
Right, you would. And the $600 is the default. It's already plugged in.
Yep.
And it provides all the information. And if you can see that you will need to prepare your 1099-Cs. So your job has been made a lot easier.
Fantastic.
Right. And there's one little trick about that. You see there's one tab that I love. It's called the Excel or the export tab. You can export that data, put it in a format suitable to your 1099 software, push one button, and maybe you can import.
Fantastic.
Yeah, so it works.
So really export it to CSV file, and then put it in the format you need, and it can fill the forms in for you.
That is correct.
That's brilliant.
Okay.
Yep, I'm going to go back to your screen over here, Bobby, if that's all right with you.
Sure. Just trying to keep up
Let's
where I am.
see where we are. I think we're on that one right there. How's that? Are we back where we were?
Good, looks good. Come on down. Let's go on to the next slide. Go to the next one. And okay, one more thing. If a customer has not made a payment for 36 months and you're still looking for the customer, that triggers a reporting requirement for the 1099-C. If your customer goes into bankruptcy, you do not have to report them on 1099-C because the bankruptcy court has already taken care of that. And that should wrap up our conversation for the 1099s, I believe.
Yeah, I don't see if there's any anything in the chat box about 1099s. Gianna, I don't know if you can see anything in the questions and answers. Let's see. There was one, but they got the answer. There is a question there that I'm not ignoring from James Elisnami, and it's about electronic tag info. We'll get to that later on, and so we'll come back to that. Let's see. Moving on, Bobby. Due by the 28th, due by the 31st.
Okay, and we're ready for the next one, I believe. Keep on going. There we are. Okay, inventory, going down to the next one. Once a year, you're required to take a physical inventory. Obviously, the best time to do that would be December 31st because that is the best time to do it. And going down to get to number 4, Bob, and we'll talk about all these at one time. Okay, on the inventory, I have some clients that only have 15, 20 cars. I know how many cars are out there. Well, when you tell a revenue agent that and they get audited, they're just going to kind of grin at you and say, really? So you need to take an inventory. December 31st, the best time to do it. It should be documented. You can run a master inventory report off of Reaves. You want to be careful about your lot numbers. Some builders will have majority of their inventory in lot 1. Some may use lot 2, 5, and 8. Random reason, don't know why, but you want to make sure you pick up all the lot numbers for your inventory. And I will advise you to reconcile it, make any notes on it you need to, sign it and date it. Why would I say do this? It just gives you good documentation on the inventory. And one thing about Wayne software is, can you open the inventory up for me 1 second, Bob?
Yep, I surely can. I'm going to go ahead and change over here back to. There we go. You should see it there. And we want to go to an inventory report, Bobby.
Right. There's 2 different ones that I look at. One would be the master inventory. And the one, this is good if you run it on December the 31st or January the 1st or somewhere reasonably close, because you cannot set a date filter in this particular report. Also, you want to watch your lot numbers when you run this report. I have had some clients to run it just the way you did it. So I get everything. I don't get the true inventory. So you need to filter your lot ranges out. If you have inventory in lot 1 and 2, you want to make sure you run it for lot 1 and 2 and not 1 through 98.
Right. So if they had like a consignment vehicle that wasn't really their car, they hadn't bought it, it was somebody else's, and it was in lot number 20, just make sure they don't include lot number 20 in the report, right?
That is correct. Consignment vehicles are not inventory.
And then this is the information at the end, the total number of vehicles and
right. And there's a second report exit out of this one. You go back to inventory and come down. I believe it's item A is in alpha, inventory as of a date. This one will allow you to run it if you're like January the 30th and you realize I didn't do my inventory. I'm going to go back and run me an inventory for December 31st. The problem with this one is you have to look at it really close because it's going to include everything that's on the books that have not been sold. It does not filter by lots. And what I do when I run this report, I like the little Excel report. I will run the inventory, export it to Excel, then I will delete the cars that are not on the lot or that shouldn't be in there. And now I have a true inventory. So you have to be careful with this particular report, but it's a good tool to have.
Yeah. Bobby, while we're talking about inventory reports and the number of vehicles, I'm reminded a friend of mine in the car business in Florida a few years back had a wreck. One of his vehicles was on a test drive and it was involved in a wreck, and he had an insurance claim on that. He carries full coverage insurance, or whatever the proper term is. Comprehensive collision. I don't know what the proper term is, but anyway, he was covered for the vehicle. But one of the things, interestingly, that the insurance company required was an inventory list. And it turns out that he had like his inventory was insured up to, and I forget the numbers, it doesn't really matter. Let's just say $500,000. But he actually had an inventory, $600,000 worth of vehicles. So they actually reduced the payout on that one vehicle because he was underinsured, maybe the term.
Underinsured is the term I believe it's looking for.
And so, so the inventory report, while they're looking at it, it may be a great time for the folks here to run an inventory and just make sure that, maybe you have more inventory in stock now than you were actually aware of, and make sure your insurance is up to date. That may be useful while they're looking at inventory at the end of the year, Bobby.
That is a very good statement, Bob.
Yep. So anyway,
okay.
You want to go back to your screen?
Go back to the screen.
I will. Let's see. I'm going to try that right there and see if it changes. Did that change?
That changed, and go to about 5 more clicks, and we're going to get all these at one hit. When you look at inventory, and there's one more. Okay, freight. When you shipping the car from the auction to your car lot, that should be included in inventory costs. If you repossess cars, repossession fees are not an expense. Repossession fees are attached to the repossessed vehicle and should be included in the inventory cost of that car. Auction fees, buyer's fees, reconditioning costs. Any money you spend on that car at the end of the year should be backed out of an expense and added to the cost of the car. So basically, any costs associated with that car should be included in inventory costs. And Wayne Software has a great system for posting all these to the inventory car itself.
So the using the software, anytime we spend money on a particular stock number of
Yes.
vehicle, we apply the cost to that in inventory, and then it will give good information at the end of the year for the dealer's CPA. Is that right?
That is correct. Now,
Put in the information.
Right. Bob, can you show the dealers how where to put the pack when you pack an inventory item, and maybe go through the reconditioning screen?
Yeah, I can do that. Let me see if I can go straight to that. Okay, so we're on the screen now. You were talking about a pack, Bobby.
Pack, and yeah, the main thing about packing a car is if you include it in the inventory reconditioning costs and you give your accountant your inventory costs, you're going to pay taxes on that pack because your inventory is going to be overstated. And I've seen that with several dealers. They would, if you go to the reconditioning screen, they would add the pack as a reconditioning cost,
right,
rather than a true pack. And you need to be careful how you enter that.
Right. And what I find interesting here, Bobby, you're using the terminology pack, which I think a lot of dealers do. And we call it a lot fee. And in this case, up on the company setup screen, the inventory defaults, this default lot fee, I just changed it to $500. But what that essentially does is automatically every vehicle we then add to inventory, it will add $500 to the cost as a fictitious fee or a fictitious cost that increases the cost of the vehicle. So that it's not that we physically wrote a check for $500. That's just an increase in the cost that you would need to know about to deduct from the reports at the end of the year. Is that correct?
Right.
And whenever the dealers are talking to our support staff, we have to be careful because we don't call this a pack. We call it a lot fee. We have another pack in the system that is used for commissions. And all that does is increase the cost of the car only for the purpose of calculating commissions. So if the dealer wanted to increase the cost of the vehicle before a commission calculation that doesn't affect the cost of the car for accounting purposes, the pack is then added to what we call the commission schedule. So if we go into a commission module, there is a pack in here which has to do with commissions only. So that's something that the terminology can sometimes trip us up, because somebody asks for information about a pack and they're thinking lot fee, or somebody mentions a lot fee and they're thinking pack. So we need to be careful about what we describe and how we describe it.
So 2 questions.
Excellent, Jana. Thank you for that. I see. What about an arbitration and the transportation cost? So transportation cost would increase the cost of the vehicle, Bobby. Is that correct? Because that's a cost that's attributed to that vehicle.
That is correct. Can you go back into the actually add a car and go into a reconditioning cost on the car?
Yeah, to the actual vehicle. Hold on.
Yes,
we will do that. So if I go to, I'll just browse a vehicle, for example.
Okay.
And I'll just go ahead and pick, this is stock number 1017, a Silverado truck.
Okay.
And I'm going to say that we paid for this. Don't shoot me on the price, but I'm just going to say we paid $6,000 for this truck right here. And would we add the transportation as a repair cost, Bobby? Is that what you would do?
That is correct. I would go to repairs.
Repairs.
Right.
Add a new cost. And then if there's an invoice number or purchase order number with that, whatever the mileage on the truck is at the time, and then the vendor, we can add the transportation company as a vendor.
That is correct.
You know, so, and then we'll put in whatever that cost was. So if the cost was $250,
right,
we'll put that cost in there, the date on the invoice, and then we would save that.
Right.
And it will increase the cost of the vehicle by that cost.
Right. GPS, anything you put on that vehicle needs to be added to the cost of that vehicle.
Now the arbitration, I'm not sure what Kenya's referring to as arbitration costs. Arbitration would be slightly different because that's going to be legal fees after the fact, unless you had to pay to go to arbitration on that vehicle for some reason. But then if it was attributed to that vehicle, then the arbitration cost for that vehicle, let me say you had to pay a fee to dispute something at the auction to get a reduction on the price, then that would be a cost that would be added to the vehicle as well.
I would agree.
And I would add that under repair costs also. So I think that answers that question. Gianna, was there something in the Q&A?
Yes, there's a question.
How is the lot fee different from the dealer processing fee? Oh, well, that's a great question. A lot fee is something that the dealer is fictitiously adding to the cost of the vehicle. The customer does not see the lot fee at all. So when you sell a car, the lot fee is irrelevant as far as the customer goes. That's just an extra expense that your accountant is going to look at and deduct from your cost of the vehicles before calculating taxes due. The dealer fee is a fee that gets passed along to the customer on the bill of sale. And the dealer fee, interestingly enough, there's a lot of issues with dealer fees these days. I spoke to somebody just last week, actually in South Carolina, who had received a cease and desist for an advertising practice on their website. And basically their website had the sales price of the vehicle. And in the fine print, they had plus tax, tag, and title and dealer fees. Well, that's not in good standing with the law over there. In fact, it's not in good standing with the law anywhere, believe it or not. So the dealer fee is supposed to be included in the advertised price of the vehicle. So if I wanted to have a dealer fee of, let's just say, $200, and I'm selling a car for $11,000, the advertised price on the website or in the magazine or on Auto Trader or Craigslist or Facebook Marketplace, wherever it is, the advertised price of the vehicle should say $11,200. If it just says $11,000 plus fees, that's actually in violation of the state and federal statutes. So that's the message that we certainly, that dealer certainly got. So my thinking is, hey, if I want to charge $11,000 plus a $200 dealer fee, why not just charge $11,200 and then advertise I don't charge any hidden fees? You can always say plus tax, tag, and title, because the title fee, the tag fee, and the taxes are set by the state, and those don't vary between dealer and to dealer. So that is something that hopefully that answers that question. You know, I'm hoping it does anyway. If it doesn't, just let us know and we'll try and get to that. We'll try and talk a little bit more about dealer fees. A lot of times discussions on dealer fees raises more questions than it does answers, because I often find, Bobby, you'll find this interesting. A lot of times a dealer will ask me the same question 3 or 4 different ways, hoping for a better answer. And unfortunately, the answer is what it is. It may not be what we want, but dealer fees are certainly a thorn in our side. And then added to it, in many states now, electronic title processing comes along, and the state says, oh, you can recoup the cost for the electronic fees that you pay a third party. It doesn't come to the state, it goes to a third party to help with the electronic processing. You can treat that just like a dealer fee. Certainly that's the case in Georgia. You can treat it just like a dealer fee. So an ETR fee, we call it electronic title and registration. In Florida, they have ETR, but it's an electronic temporary registration, refers to temp tags down there. But in Georgia, if you charge an ETR fee, in Florida, maybe an EFS fee, then that fee itself is supposed to be treated just like a dealer fee, gets added to the price of the car before you advertise it. So it's part of the advertised price, and then it's also taxable. So anyway.
Okay.
Somebody says, I do not understand dealer fees. I just don't understand fictitious fees and what their purpose is. Is that not a hidden cost? So it gets confusing. So let me try and explain, Bobby. Correct me if I go off the rails here. Inside of many dealers, let's start with many dealers. A dealer goes to the auction and he buys a car for $5,000. He gets it back to his lot and he sells it to a customer for $6,000. It looks like he made $1,000 profit. But what he likes to do, so that he really in his mind is thinking that really how much money did I make on this car? A lot fee, or as Bobby calls it, a pack. What he wants to really know is, how much does that car really cost me? I know I wrote a check for $5,000 for the car. I know the customer gave me $6,000, so I made $1,000 profit. But I had a mortgage payment, I had a light bill, I had a power bill, I had a garbage bill. I washed the car with some shampoo and used some rags to detail it. So overall, I've got some expenses in that vehicle. Maybe it really costs me, if I add up all of my fees for each year, for example, all of my power bills, all of my rent, my mortgages, my advertising expenses, my software expenses, all of these different expenses, I add them all up and I total them all up for the year and divide them by the number of vehicles I sold that year. Maybe I come up with $500. So what happens is, it costs me, before I even sell the vehicle, it costs me $500 per car that I have in inventory. So really what that lot fee is it's a way for a dealer to think in his mind. And we used to do it in the old days before computers could really keep up with this stuff. We would say we paid $5,000 for a car. We know that we're going to have an extra $500 on expenses on average on all my cars. So now I'm going to put in a $500 lot fee. It's a fee that it costs to put this car on my lot. So that's why I call it a lot fee. So now I know I've got 5,500 in it. So if I sell that car for 6,000, I only made $500 in my mind. Now, the IRS is going to look at your paperwork and say, no, you paid 5,000, you sold it for 6, there's $1,000 profit. Well, that's where Bobby Burt, the CPA, is going to work his magic, and he's going to look at all the other expenses and apply them in the appropriate place on your tax returns, mortgage expenses, interest expenses, utility bills, and the like. So hopefully that kind of illustrates the why dealers use a lot fee. I don't think they're great to use, but some dealers do. Bobby?
Yes.
Did that confuse everybody even worse?
It's no worse than me working a tax return and you tell the client how much he owes. Oh, I gave you the wrong inventory number. It wasn't that high after all. It was a lot less.
That's funny.
So I worked the return 3 times.
All right, you want to go back to your
We can go back.
There's something else I need to show there. I got distracted a little bit. I'm sorry.
Well, no, oh, that's good information. So good information. Let's just go back to the presentation.
I will.
See where we are in the program today, sir.
I think that's where, I think we're right there. I think we're on number 4. What is included in inventory costs?
Right, and we hit number 4, so I think we're ready for number 5 and hit 3 clicks. Okay, inventory write-downs. The IRS will allow you to write down your inventory to lower or cost or market. So if you bought a car for $5,000, say 2 years ago, and that car has not sold and it may be worth $1,000 less, you can take a write-down to market if your inventory method that was chosen on your tax returns allows you to do that. When you file your tax return, you have to choose a inventory method. When I work with my clients, especially new clients, we would choose lower of cost of market. So you might want to talk to your accountant about your inventory value and can you write your inventory value down when you get ready to do your tax return. That would be a question that your accountant can answer better than I can on your particular tax return. But when you do write it down, keep in mind, it's not your determination of what the car is worth. You have to use some kind of guidelines. The IRS recommends NADA as documentation to write cars down. And Bob, there's a place in the software to write the car down too, am I correct?
Yeah, there is a place in the software to write down the vehicles. In fact, not every dealer takes advantage of write downs, maybe because they're moving their vehicles so quickly that the vehicles don't actually depreciate while they have them in stock. So a lot of people turn the write down feature off and don't use it. But there is a feature, and what I'll do real quick is I'll jump back over to the screen where it is in the company setups under car company setup. And if you can't find this later, it's not a problem. But there is the feature about halfway down the page here. It says allow the use of write down feature on the inventory screen. A lot of people will have that turned off because they're not using it. But if they want to, you just come in here, turn it back on, and you're good to go. But if you don't use write down, there's no need to have it on your inventory screen, just being there the whole time. And then when you go into a vehicle, we'll just choose that Silverado again. Hopefully you can see that. There is the write down box under the vehicle costs, and that will actually lower the cost of the vehicle. It'll then put it on a write down report, Bobby, so that you can pick it up at the end of the year and know what vehicles were written down.
That is correct. It will show up on your inventory report.
Yeah.
Sounds good. But that was the only thing we can do there. Anything else on, okay, let's go back to the presentation.
Okay, well, and I clicked the wrong one, but here we go, back to there. I think you should see that now.
I do, and go down 4 more clicks.
Did you say 4 more clicks?
4 more clicks. That'll work. We can do there. Repossessed vehicles. When you repo a car, it does not have a 0 ACV. You ever seen that before, Bob?
Yeah, we see it a lot, and it's an easy mistake to make because whoever's putting the information in, they maybe don't know the value of the vehicle themselves, because the person that's printing out the letter may not be the person valuing the vehicle. So we'll put 0 in there just now and come back later on and forget to put it in. So that's a common mistake.
Right. And
But I can make up the ACV, correct?
Right. The IRS recommends NADA. I'm sorry, say again, please.
Yeah, I just said I can make up the ACV, but you're answering it. The IRS say no.
No. You cannot make up the ACV. I mean, you may know what the car's worth, but the Revenue Service thinks NADA has a better determination. So
Gotcha.
they recommend using NADA values. And I think your software has a switch that will automatically populate that. Am I wrong or right?
Yeah, the software can pull the NADA value, but the dealers have an ability to use the NADA guide within our software. Now, there's an additional $65 monthly fee for the NADA guide to be built in. Don't have to have that if you have an online subscription or you have the physical book. Then it's not you don't need it in our software. But a lot of dealers like to use it in our software because any of the computers that have access to our software will then have access to that book value. So if you've got 2 or 3 or 4 or 5 or 6 or more employees, they can have access to that book value if you need them to in the software, which is nice. So that way you don't have to have books scattered everywhere and pay multiple subscriptions. So that can be a benefit.
Right. But if you do use a book or outside source, you want to make a copy of where you got it from, stick it in the dealer jacket or the car jacket. Because if I'm auditing you and you say those are NADA values, my next question is, show me. Where'd you get them from? I want to see your documentation or your source where you pull that NADA from. And if you can't show me, I'm going to disallow it. So you want to document everything you do. Now, what day of the month is this, Bob?
Well, today is the 18th of December.
18th of December. So you got cars you need a repo, but you don't want to repo before Christmas. So I'm going to get these, say, around the 26th or 27th. When you repo the car, Bob, is it over?
When you repo the car,
Is it over?
Is
Do
it
you have
over?
a curing period?
No, it's not over, because I'm going to send a letter that gives the customer 10 days, maybe 20 days to take an action. They can either come in and pay me off. Maybe I'll let them catch me up if they've been a pretty good customer to this point and it was easy for me to find a vehicle and the vehicle's in, I think the customer's looking after the car, for example. So I may give the customer the opportunity to come back. So I can't do anything with the vehicle for at least 10 days, essentially, anyway.
Okay, so that means if I repo my car on December the 27th, I don't have a bad debt for this year, do I? Because I
You
don't
wouldn't
know
have a bad debt this year. No, you would not.
Yeah, so if you want to charge off your repos this year, you need to keep in mind, if I got a 10-day letter, I need to repo them at least 10 days before the 31st. Otherwise, that ending period, a curing period, is going to end on the 1st. Then that bad debt would go to 2021 rather than 2020. So if you want to cure your repos this year, you need to make sure you look at your repossession letters and repo them in time to decide if the customer is going to redeem that car or not, to determine which year that bad debt's going to fall in. Okay.
Fantastic. Now there's a question in the Q&A box there that it says, I struggle with this all the time because all of the repossession info is asked for at the same time you're trying to notify the customer that you have repoed the vehicle. And yet I can't do any of the needed repairs to put it back on the lot until you've actually, have possession of the title. So this is a great question. And this gets into repossessions. This really has less to do with accounting, Bobby, but it has to do with once you've repossessed the vehicle, there can be issues. And this is where you really got to talk with an attorney because you run into a lot of different potential issues here. I hear people say all the time, well, I repoed the car and it needed an engine, so I put a new engine in it. And then the customer, so I put an engine in and then the customer wants the car back. Well, you've got to be very careful. You can't just go ahead and add big fees to the vehicle. It's one thing to protect the vehicle from damage, to maintain its value, but whatever the value of the vehicle is at the point of repossession, that's what it is. So the value of the vehicle at the point of repossession is the NADA guide value, Bobby. It has nothing to do with any you know, if let's say there was a blown engine and it was going to cost $4,000 to fix that. When you repossess the vehicle and the NADA guide says the vehicle is worth $6,000, yet you know that it's got a $4,000 engine repair due. Bobby, can you make some adjustment for that to say the vehicle at the time of repossession, the value was only 2,000 and not 6,000, or would you still recommend the 6,000? What would you do?
I have a variety of dealers doing different things there. A lot of my dealers would take the NADA rough and just go with it. Some of the dealers would take NADA value and then estimate the cost and try to document it and then deduct that off to determine what the ACV that vehicle left. So, you know, the safe answer would you just use NADA, either good, rough, or how you want to go with it. That would be the safe answer.
Right. So use the NADA guide. And if you have a $4,000 expense later on, then it's a $4,000 expense later on. Right. But you're not taking it right now based on what the expense might be later.
Right. You will get that cost back. You may not get it until you sell the car, but eventually either you're going to take it today or take it tomorrow. A lot of my dealers are being more conservative and just going NADA value because if they get audited, everything just kind of falls together.
Right. So that's it's a good question. It's in the chat box there. And it does have to do with the value. So NADA guide value, and if you do some repair work, that's you're going to be able to account for that later on anyway.
Correct.
Okay. Cool.
Hit about 7 more clicks on your monitor there. 2 more. One more. One too many.
How about that?
Okay, there we are. Repossessions and charge off. Let's talk about this again.
All right, and this might help answer the question anyway.
Okay, repossessions, we pretty much hit pretty good up above us. I do want to note you that bankruptcy is not a charge off until the bankruptcy is complete, because when a customer goes into bankruptcy, you do not know at that point how much money you're going to receive until the customer is out of bankruptcy and everything is settled. So you cannot charge a bankruptcy off until it is complete. Okay. And then Reaves has a couple of reports that they can run that will actually show you the charge offs. Can you pull that up, Bob?
Yeah, I sure can. Yep. Let me click on my new share here. So basically
reports.
We can charge off here, and then under the reports.
You have 3, which is or 7. I like 7 is a write-off repossession report. That's where I pull my repossessions from. And then coming on down to M, which is the charge off and bankruptcy repossession report. Both of those would give your accountant all the information they need to complete your tax return.
And Bobby, the information on those reports, did we get some good help from a CPA to help generate those reports for exactly what was needed?
Well, he was from Alabama, so I don't know if he was a good one or not.
So a lot of the reports, and I will certainly say thank you to Bobby Burt for his help. An expert in the automotive accounting, and he's certainly helped us with many of the reports in our software to provide exactly the information he needs in the format that he can use it. So if there's anybody out there looking for a CPA, not that the game plan is to get you to switch CPAs, but Bobby certainly knows our program inside and out, and has a close working knowledge of how it works. And because it's web-based, Bobby, you can actually log into your clients with their permission, the client's computer program, and run the reports you need without having to bother them for the reports. Is that correct?
That is correct. I don't have to call them 5 times and say you printed the wrong report. So we actually log in for our clients and reprint any reports we need out of the system. And if a client has an issue with the report, they will call us and we can help them understand the reports.
Fantastic. Well, I'm going to go
That's
back to your.
reports.
I'm going back to your presentation here, Bobby, because you
Okay.
were on number 7 down there
All
somewhere.
right, and just go ahead and get me about 5 clicks on this one. We're going to hit 2 items at one time. Okay. And that's good. Okay. Bank statements. You know, the mailman sure is happy now that he don't have canceled checks in his bank statements on the first of the month. All the canceled checks are PDF now. You remember those days, Bob?
I do. You get all your checks back in a little stack.
Right.
And
Yeah.
have to save them. I mean,
Made the
that's the
mailman a
old
lot
days,
happier.
Bobby.
So, well, I would know, but be careful because a lot of banks, you will rely on going online and looking for a check when you need one. That's great, but you know, how many times have banks been bought and sold over the past 5 years? I recommend to all my clients is go on, pull your bank statement off and save it to a PDF file. That way, if you ever need to go back and look at it, you just can pull your PDF file up and look at it. And some banks, they don't give you all the canceled checks. You have to ask for them. Make sure you get the canceled checks on PDF. The reason being, if you get the bank statement, it's going to tell you the date you wrote the check number, and the amount. That statement will not tell you who that check was written to. That's where the canceled check comes in. That's your primary documentation. Also on debit and credit card charges, you really need to retain the receipt or at least PDF it at the time of the charge. IRS requires contemporaneous documentation, meaning that does not mean at the end of the year you print a year-to-date statement and go back and notate what it was. That means when you incur the cost, you have to document what that cost was for. I have several dealers that I will have them when they put gas in the car, they get the debit out of the machine, the paper. They'll turn the receipt over and write part of the VIN number or the stock number on the back of the receipt. That kind of adds documentation that gas went in that particular vehicle. So documentation goes a long way. And far too many times I ask clients for information. Well, I didn't retain that, or I didn't keep that, or I didn't think it was important. Everything's important. So you want to keep everything you can and just document everything you do. A big one is debit card charges. You don't keep the receipt. You rely on the statement to pick up, who it was to. The receipt is better documentation. And Bob, anything you want to add to this?
No, I think that's correct. So if you spend money on a stock number vehicle for gas, you have the receipt, you put the stock number or the VIN number on it. You put that in the file jacket for that particular vehicle, Bobby, and add it to the cost of that car?
Yes. That's what I have my clients to do, is to save all the receipts and stick them in the file jacket. Now, you have some clients that have their own filing system. As long as you can understand it and you can explain it, I think it's a good system. When you can't explain what you're doing, then obviously you got a problem on keeping your documents correct. But the main thing is get the receipt, either shoot a picture of it with your phone, document it that way, or either write on the back of it, but do some kind of documentation when you incur the costs, not at your end.
Right. So, I mean, I think a lot of people are, I know that for work purposes, we have our smartphones, and there's a couple of apps that are really inexpensive, nothing to do with, this presentation, but you can actually scan the receipt and maybe save it in a Google Drive or a Dropbox or something like that, right?
Correct. And also when you scan it, a lot of the apps will let you notate what it was and why you incurred the cost too. And that comes back.
So you can keep them electronically, but the hard copy you still want to stick in the file jacket. That way you can always pull it out and everything's in there.
Correct.
Cool.
Okay. Go down about 3 clicks.
Oh,
One too many.
How's that?
Okay, very good. Deposit receipts. You need to document the money you take in. And I would recommend trying to reconcile your cash sheet to your deposit ticket, because if you get audited, the revenue service is looking for missing cash not deposited to the bank. If you can't prove what you took in and what you deposited, you can't prove what is missing. And Bob, does the cash sheet help this way a lot, you think?
Yeah. And in fact, the cash sheet that the dealer runs from our program should match the deposit slip. And so here we have again a problem with what we call things, because some people talk about a deposit on a vehicle or a deposit, which may be what some people refer to as their down payment. And then what we are thinking about as a deposit is when we go to the bank and we take them all of our payments that we received today and we deposit them in the bank. That's the deposit you're talking about here, correct?
Correct.
So if I sell a car today for some cash money, and then I do a buy here, pay here deal where I take a down payment on a car, maybe I have another person that wants to buy a car next week and they give me a deposit to hold the car. So I total all this money and then I take some payments for cars I sold previously. So I print a cash sheet from our software that has all of this information on it, and the amount of money I've collected today in my office should match the deposit slip that I make at the bank.
We hope.
I staple the two together and put them in my file jacket for cash sheets or receipts, money I've received.
And if for some reason they don't match, say you might have taken cash out to go buy a part, I would make a notation on the cash sheet itself and probably make a copy of what I bought and attach it to the same cash sheet. That way I got the money taken in less any money I paid out. I highly recommend using petty cash for payout and not taking money out of customer deposits.
That makes sense. So petty cash, have a petty cash system. One thing that it may be worth, since we're talking about cash sheets, Bobby, I'm not sure you would get to this or not. So I'm going to go ahead and make mention of it in our program. I think this is quite a valuable tool for dealers that are taking money in. And this is where Bobby's talking about the cash sheets there. You'll see the bottom line on the previous slide was Reaves cash report 4-1. He's referring to reports number 4 and then number 1 cash sheet. And so if I click on the cash sheet, if you make a deposit at the end of the day, you can run the cash sheet for the day, and it will be correct. The problem is if you go to the bank in the middle of the day, then you're going to have payments later on and payments the next day, and then you go to the bank in the middle of the next day. How do you handle that when you've got payments straddling a day and the date range doesn't work? What we recommend is the ability to run the cash sheet by uncleared transactions. And so what this will do is this will put any transaction or any money that was received since the last time you ran the report in a batch, and it will print them all for you. So each day you come in, you run the cash sheet, not by date range, but by unclear transactions. And it will put all of the transactions on that report for you so that will more easily match your cash sheet, especially if you go at odd times during the day to catch the bank still open. I just wanted to throw that in there, Bobby, for you.
Yeah, I figured you were going to catch me on that one, so I'm going to save that one for you.
There you go. Now I'm going to go back to your presentation there, I think.
Okay.
So you should see that again.
Sounds good. And let's go on to the next slide. Sounds good. You can go down about 3 clicks. 2, 3. Okay.
Is that too many?
I think we're going to talk about this at the end of the year. I recommend that you review your accounts receivables. You want to make sure if there's any accounts you can charge off, you want to go ahead and charge them off. And you can, Bob, what's the best way to look at that on the system to determine if I got any customers that is kind of.
I'm sorry, say that again, Bobby.
If I got any customers that I might need to charge off. And, let's pull a customer summary.
A customer summary report. I can do it.
Sir.
Hold on. So I go reports, account receivables. Now this is a customer summary for the car lot, not for the related finance company. Do you want the related finance company customer summary?
No, let's do the car lot first.
Okay.
Okay. On this page, there's something that I want you to look at. As of date, report as of. If you do not run this report at the end of the year, it does give you the option to go back and run it for December sometime in January and February. So, that is a backup option that is good to have on this report. Otherwise, when you run this report, it is what it is at the time you run it. So if you took payments this morning, or if you run it this morning, take payment, run it this afternoon, it's going to be different. It is a on-time report or current report, correct, Bob?
Yeah, I refer to these as kind of snapshots. It's a snapshot report. It's the same as an inventory report. If you were to take a snapshot, you know, a photograph of all the cars on your lot, that's your inventory today, and that's going to change tomorrow, or maybe it'll change this afternoon if you sell one. If you repossess one, it's going to change. So the inventory report, and in this case, the customer summary, which is where your customer stands right now when you run it. This will vary during the day as you sell customers and as you collect payments on customers, the numbers are going to change on the report. So that's why it's important to do at the end of the year or the last day of the year, correct?
That is correct. And look at customer number 3.
Okay.
That 294. Does that mean anything important?
Well, that's in this particular case, because this is just demo data or deal that we use for.
I understand that, but if I was looking at a regular customer with that amount,
yeah, 294 days past due.
Yeah, he would be a problem, wouldn't he?
He would be. Yep.
Yeah, so that's why I always like looking at this report, and I go back and look at days since last paid, and they see if everything is consistently reasonably current. If not, I will ask my client, what about so-and-so? Is he paying, or do we want to charge him off? So, you know.
Good point.
Yeah, that's one reason I look at your customer summary to see if you missed anybody or anybody we need to talk about.
Right.
Okay, and you said pull the one for the related finance company. That's in a different section.
Yep. So we go to reports, finance company reports, and then it's number 2 here. So 6, then 2, customer summary report.
Correct.
And again, we can run it for the active types.
Right. Now, one thing about this report, it is a real-time report. You do not have the option to go back and run it 3 months from now.
Right.
So it's very important if you want to get a good snapshot on December 31st, you need to run this report as close to that date as possible. And for a lot of my clients on New Year's Day, I just come to the office, print me a bunch of reports, you know, what for all the football games.
Right.
So, you know, it's a good thing to do.
Yep. So the first of the month, but it's a holiday anyway. So the first day of the year, nothing else going on. The car lot's closed. You can't be taking payments. So you could just run the reports anytime during that day. Or if you come in first thing on the 2nd of January and then run them all on the 2nd, they'll still be the same because your inventory won't have changed. And you know, payments might have done, especially with online payments, Bobby, if you're taking online payments,
That's
customers
true.
pay on the 1st or the 2nd before
That
you
is
get
so
there.
true.
So the customer summaries, if they're automatically posting, then there may be a change in the system. So yeah, still the last thing on you know, New Year's Eve to do. I'm going to go back to your screen.
Okay.
There you go. Try that.
Okay, sounds good. Let's go about 4 clicks. And one more click. And one more click. There we go. Okay. We're coming up on your end. If you need to purchase any equipment, you need to do it before December 31st. This is kind of just a highlight of what you can do. Basically, any office equipment you buy is 100% deductible this year. We can take either bonus depreciation. Bonus depreciation is new or used personal tangible equipment, or we can take 179. So if you need to replace your AC unit this summer, you might want to look at doing it now because you can write it off now. If you replace it next year, we don't know what the new tax law is going to bring. We may lose that write-off deduction on HVAC and roofing. We may have to start depreciating that again. So there's a lot of unknowns at this point in time as to where we're going to be this time next year. Also, I'm always asked, I want to buy a new car. How much can I write off? Basically, on a car that is limited or listed property, you can take the $10,100 bonus depreciation, and then you can get another $8,000. That's if you use it 100% for business. If I use that car 60% business and 40% personal, I only can take 60% of that number. So you have to determine, is that a personal car, or is that a company car, or is that a combination of business and personal use? But generally, I don't recommend taking cars as big deductions. I'd rather take the mileage. I take the mileage and forget about it. If I take the vehicle and when I sell it, I'm gonna have to pick up that depreciation again as income when I sell the vehicle. So that's just a highlight. If you need to buy equipment, you need to buy it before the end of the year.
Bobby, you mentioned mileage.
Yes.
So I can just guess the number of miles I drove in a year.
Well, you know, a guess is not a good thing to do when you're doing your taxes. Usually a guess can get you or your accountant in trouble. So if you're taking the mileage, you need to document the mileage. Now, there are several apps that you can use on the phone that would actually document the mileage for you. You know, you just let your phone do it, and at the end of the day, you go in and you can either swipe personal one side or business the other side. So, and it will keep up with your mileage for you. But documentation, documentation, documentation. You can't prove it, you'll lose it.
Yeah, good advice.
Okay, let's move on to the next one.
Oh, yeah, SUVs down there. Okay.
Okay, let's go down about 5 clicks. We're gonna hit all these at one time. Okay, this is a list of reports that are on my target when I do a tax return. I always go back to these reports, and I want to pull the sales report for a second. I see more problems on the sales report than I do a lot of other reports.
I'm going to go ahead and switch to that screen right there. So the sales report.
Standard sales report. Okay, first one. I have a related finance company, Bob. What are my lot numbers for related finance company?
Your lot numbers for the related finance company typically going to be 50 or 51 through 99.
So if I'm going to run my sales report, I got 2 choices here. Do I want to run it 1 through 99 or 1 through 49? Since I have a related finance company, what are those lots for the car lot? The car lot's 1 through 49, 1 through 50. Yeah. So if I'm running this report and I sold cars to my related finance company, that last number is still going to be 99. If I only run it through 50, I'm not going to pick up any sales on cars that were sold to the finance company. So 1 through 99 on the sales report. Okay, problem number 1. Problem number 2, always check your dates. You'd be surprised they'll run it from January the 1st of 2020 through the current date. No, the year came to an end on December 31st. So you want to make sure you cut it off on that date. Other than that, this is a very good tool for your accountant. Now, one more, let's look at one more thing. Go to the end, Bob. And I've seen this before a lot of times on when I look at tax returns. I'm trying to see if you got, okay. Highlight the finance charge. Right there. That number is not income at point of sale. I picked up tax returns when I'd get a new client. I would go back and look at the tax return. I said, man, your income so is high. Well, I get the sales report and they included the finance charge off the sales report in the tax return. That is potential finance charge that you may collect over a period of time. That number is not income at point of sale. The finance charge you picked up for your tax return would be off of the cash sheet. We'll show that one in a second. So you want to pick up only your income items off the sales report for your tax return. Any comments, Bob?
No, that's a good point. And the cash sheet will have the interest that's actually being collected.
That is correct. Any interest or late charges or side notes.
Yep.
Okay, and that's all I have on that report. And let's pull the cash sheet back up one time.
Again. I will. So go to cash sheet.
Right. Now, I use this report for both the car lot and the related finance company. The difference being in print 4. you can either print for the car lot or you can print for the related finance company, and it pretty much will do everything for you after that.
Yep. So the cash sheet is the money you've collected, and you want to see the money collected separately, for one for the car lot and one for the finance company, because
That
you've
is
got
correct.
two separate bank accounts, correct?
I hope you have two separate bank accounts, and you should have two separate entities too. So, but anyway, if it's the next year and we've been treating this as one bank account, I think we got an issue.
We have an issue. Okay, so that's good. So that's why the cash sheet will divide it into two.
Right, and just run a quick report for the car lot. Let's look at the
car lot. I will.
And when you get there, you can go to the last page. And on this one, you can see the interest you collected, it's $340. Then you'll have any late fees, side notes, and chargebacks.
Yep.
And this is where I get it. And if you ran this report for your related finance company, up between interest and balance, you will see the word discount. That would give you your discounts to recognize on your tax return. That's the primary difference in this report between the car lot and the related finance company.
I'm just going to go ahead.
And there's your discounts.
No, I don't have any payments on that one today.
Okay, and that pretty much sums up everything that I think I have to discuss on the year end.
Cash reports, inventory, what your lot numbers, the reports, a lot of the reports in the system, like the sales report, can be ran after the fact. So you can run the sales report really anytime. It shows you what you sold by date range. But the reports that have the snapshots that are where you stand today, the inventory reports and the customer summary reports, those are important to have at the year end, which will then become the beginning inventory report for the next year. So your ending inventory one year is going to be the same as the beginning inventory for the next year. Is that correct?
That is correct. We hope.
We hope.
You're kind of married to that number when you start the next year. So,
and then you had a couple more reports here, write-off reports. We talked about those already in the charge-off reports.
Right. Yes. But if you would pull a repossession report one time, we mentioned this. I just want to go back and highlight it one more time.
All right, let's see, reports.
On accounts receivable, report 7.
Write-off repossession report.
Correct.
And we'll do it 1 through 99 so I can get something on there. Let's see. Let's change it to the car lot. Okay, so here you are.
Okay.
Write-off report for the car lot.
What is the first problem I've spotted on that report?
Well, the first problem is you've got some ACV, Bobby, with zeros, some
That's
zero
correct.
ACVs.
Yeah. No, there may be a reason. Normally, there shouldn't be any zeros in ACV, but there could be a reason you got zeros in ACV. If, let's say, Bob, someone forgot to put an ACV in, can they go back and add an ACV?
Right. Can they go back and add an ACV?
Yes.
Yeah, I think you can do that. So you can go back and add an ACV.
Not sure support can walk you through that pretty simple.
Yeah, you can add an ACV, so you can go back in, and let's see, this one didn't have possession of the vehicle, so maybe that's why there was a zero ACV, Bobby.
Okay, gotcha.
So if you go back in now, I can put an ACV. So this was the one, 3562 RFI. I clicked on the blue number there and it took me right to the repo screen. So as I'm going down that, if I'm looking at the report and on the screen and I see, oh, there's a zero ACV, Bobby's not going to be happy with that. And I see, well, I didn't get the vehicle, but now I do have it. And I know that it's got a $2,500 ACV. Then that's going to let me save that in there.
Okay. Yeah, I like that report. And if you slide up a little bit on the report, come to the bottom, Just there we go. That gives your write-off amount. Go back up, and you see the 57,689.94 as the write-off amount.
Very good.
And that pretty much complete what I have prepared for you.
Yeah, that's a good report. I'm going to go back to your screen over here. How about that? You back on your screen?
Okay, yeah.
That's where you write-off report, charge-off reports, anything else. Now, we're not completely done yet, so don't just log off. What I'm going to do, and Bobby, you may be interested in this.
Okay.
I'm going to do a quick sneak preview of our new software.
Awesome.
The software we've been looking at is the current version of the software that we deploy. When somebody signs up to use our software, that's what they get. But next year, we're going to be slowly starting to deploy the latest version of our software, which instead of running like this as what we call client server, where there's a little portion of the program talking to our database, our new version is completely browser based and will run even on a smartphone. And so I'm going to go ahead and let's see if I have got my, let's see here. Okay, so what I was going to do is I was just going to show briefly the new look and feel to the new DMS that Jason Reaves and the development team here at Win Reaves have been working on for quite some time. It has all of the functionality really that the current version will have, but it runs in a browser-based format. So you'll see there's a dashboard. It's got easy to look at tiles. Whenever you select, for example, view inventory off the inventory menu, you'll get a list of vehicles. You'll have some intuitive icons that you can look at. You can click on, for example, the Toyota Camry there, and it will give you the opportunity to see some basic information about it. You can then click on open, and it will take you to many of the same features that you see today in the current program, where you have the tabs along the top with the details, the repairs, the options, the title, the DMV. This is all the stuff that you currently have, the book values. If you want to sell a vehicle, buyer's information, you'll have the opportunity on the car lot to be able to, if you're walking on the lot with a customer, open up the smartphone with your program on it, scan the customer's driving license, for example, and it will fill the information in. So again, you've got the vehicle information, the mileage prompt, the sales information for what you're selling it. It'll pull in the title ad valorem tax in Georgia, calculate your sales tax for you in Florida, and IMF in South Carolina, and HUT in North Carolina, wherever you are, it will calculate the taxes and everything for you. Finance charges. It'll give you the breakdown of the information under a recap, so you can see everything. Choose the forms that you want to print. You can select them all or unclick the ones you don't want. If I just selected the bill of sale, for example, it'll pull it right up to your screen for you. It'll also allow you to use our electronic signature partner, DealerSign. Many of you guys are probably already looking at electronic signatures. We have a partner there that will allow you to electronically sign documents, you and your customers both. And so you'll be able to do that not only from the new program, but that feature is currently available in our existing program, the program you guys already have. But the ability to then take the money that you're getting down on a deal, save it as a pending sale, and book the deal. And that will allow you to a quick sneak preview of what's coming. Electronic signatures I mentioned are already here. And something else that I'd like to mention, for those of you that use our website service, our websites, obviously we can help you with Facebook Marketplace and Facebook marketing. We can also help you with Google. And really, with Google, we can help you whether you use our website service or not. We do have what we call an intelligent inventory marketing platform that allows, we've got many dealers that use this currently. It allows you to use the services of Google to pay for advertising. And what it allows you to do is it really allows you to get the vehicles that you have on your website and place those vehicles in front of high intent shoppers. So the main features, I think, with the Google advertising, you can see what you're spending with the advertising. You can get your clicks tracked, so you can see the traffic that you have coming to you and where it's coming from. We manage that for you. We've got some specialists in our team that are good with Google and understand it, and they work to manage that service for you. It's month to month to month. If you don't like it, you turn it off, and you get real-time reports. You can see exactly where you are anytime you want to see them, and so using the Google Analytics. So if you've never used Google, maybe give us a call. Shoot an email to Gianna. She's our marketing, one of our marketing specialists. She will point you in the right direction with one of our team members. So jot down that email. Gianna is fantastic. She's helped with our presentation here. She's been on the whole time and listening along intently with you guys. And we're pleased to be able to bring the partnership with Google to car dealers that use our services. So we could talk to you more about that if you would like. I don't know if there's any other questions that we've got. Gianna, do you see any other questions in the chat box there or the Q&A box?
But if anybody has any last minute questions, you just want to type it in there really fast. We'll try to get to it quickly.
We certainly appreciate everybody being on board with us today. I hope you found the presentation useful, and we certainly appreciate Bobby Burt spending time with us. And it's always interesting doing these Zoom classes. They're always a little bit different. You never really know what technology is going to bring to the table for us, and we certainly have enjoyed being presenters for you guys. Can you review the presentation again? Yes, I think you can. I think Gianna will edit and crop out the bloopers for us and make it a little bit smoother. Maybe she can Photoshop Bobby and I and make us look better.
It'll be available on our YouTube. Probably I can shoot for the end of the day to have it up there.
Maybe the end of the day on our YouTube channel. You can go to WayneReaves.com. You can go to the resources and where the in-person and webinars are. You can click on that and it will take you to a place where our YouTube channel is. Yes. We do also work with Facebook advertising. So we can provide, if you're using our website service, we are essentially your Facebook partner. So we can help you with Facebook Marketplace. We don't charge any additional fees to help you with the Facebook Marketplace. If you want to take advantage of the Facebook advertising that is paid advertising, absolutely, we can help you with that. We can help with the carousels and all the fancy features that Facebook will make available to you. So we can certainly help you with that. The YouTube channel is on our Wayne Reaves website. You can link to it from there. That's the easiest way, WayneReaves.com. Click on the resources. The top choice is the training and webinars. And there's a link to the YouTube channel right there where you can watch all of the videos that we've created. There's not tons of them because a lot of the information is somewhat repetitive, but but we do have some good information there.
I think the web address is youtube.com/Wayne Reaves software, all one word.
Anything else? Kirk, you're welcome. We see I think we've got most of the questions.
Yeah.
If anybody else wants to type in a question, feel free. They can always email myself, bob@waynereaves.com, or Bobby at robertburtcpa.com.
Correct.
Thank everybody for their time and their patience with us as we work through getting started at the beginning. And we appreciate everyone being here. Thank you very much. Bobby, thank you, sir. It's been a pleasure.
Appreciate it.